Hello, I'm Alex from Prosperity Finance and welcome back to the channel. In today's video, let's talk about different types of incomes that can be used when you're applying for a home loan. To start with, the most frequently used income is, of course, the salary income. It's also what we call a PAYE type income. So for this type of income, it can be used 100%, but it's further differentiated into two categories. One is if you are under a permanent contract, regardless of if it's a full-time or part-time, it's pretty straightforward. So we just have to look at the pay slips for past 3 times pay. And if they are consistent, we can use the base amount of salary 100%. And then on the other hand, if you're on under a casual contract, then the policy can be slightly different from different lenders. It's ranging from using 6 months of average to over 2 years of average, is depending on which bank we're going to. On top of that, if you also receive overtime commission, or allowance or bonus, they can also be considered, but the policy are different. So first of all, if it's from overtime or commission, most of the time, 80% of that amount can be used. So how to assess how much of overtime and commission that can be used? It's different from lender to different from lender to lender. But most of the time, it's like average from past 3 months or 6 months, depending on which bank or which lender you're going to. Allowance is similar to overtime and commission, but it's slightly different. There's a rule that if the allowance, we need to understand what kind of allowance that is. And first of all, it cannot be a non-taxable allowance. If it's non-taxable, it cannot be used. If it's a taxable allowance, we need to understand if it's actually to reimburse any costs that you've spent first. And we just need to understand if that allowance is extra income they receive. It's not to compensate something that you've spent and just give it back to you. Bonus, that's more tricky than allowance and overtime and commission. Not all the banks or lenders accept bonus. If it's accepted, it's also most of the time calculated, can be used for 80% of the total amount of bonus. Some of the smaller banks like TSB and corporate banks, they do not consider bonus income at all. Okay, so then the second big type of income is self-employed income. We see quite lots of customers with self-employed business. So if we are going to a bank to apply for a mortgage with a self-employed income, most of the time, the standard way of approve the income is to use the past 2 years financial reports. But in some very special cases, bank will accept financial reports that's less than 2 years, but it's very unlikely and it's in very special cases. If your business is less, or regardless if you have a company or you're trading as a sole trader, if your business is less than 2 years, the alternative option is going to a non-bank. There are non-bank lenders that they provide different categories of products to cater for clients with different length of business that's been running for. Sometimes you can even take consideration if you do not have any financial reports. They just look at your GST return and your bank statements. They can evaluate those documents and let you know how much you can borrow based on that results. But of course, the downside is that the less the financial record you have, the higher the interest rate you will get from non-bank lenders. Okay, so next one is government benefits. So these, if it's can be used, the lender normally will take 100% of the income. But there are some criteria you have to meet. First of all, that benefits need to be long-term benefits, such as family tax credits or accommodation supplements, these sort of long-term benefits. And also, most of the time, the lender will come back to us and ask for a confirmation or some sort of proof to show what sort of benefits amount you're still going to be receiving after you purchase this property or after settlement. Then the next one is child support. Child support can be used as well. Most of the time, there won't be any discount, so you can use it for 100%. But there are some lenders that discount it slightly, so they normally it's ranging from 80 to 100%. And also the policy on how to calculate the child support, how when you can use it is slightly different from lender to lender. So some lender will require you to have at least received 3 times of payments before they can use it. But other lenders, they might ask you to show them evidence of receiving that child support for more than 6 months before this income can be considered for your loan amount calculation. Then we move on to rental incomes. That's local rental incomes within New Zealand. Generally, they can be accepted with shading. It's a discount, but the bank loans call it shading. So the amount of discount differs from lender to lender. And some lender also apply different sort of discounts depending on the time, like the date you purchased it or the date it's being completed, the construction being completed. Also, similarly, flatmates or border incomes that can be used as well with a discount. Again, the discount is different from lender to lender. And most of the lenders in New Zealand, well, not lenders, but most of banks in New Zealand can accept up to 2 borders. So it doesn't matter how many borders you actually have. If you have like 4, 5, the maximum normally is still 2. Another thing to note is if you're using flatmates or border income, there's normally a cap. So the maximum income from flatmate border that the lender can accept. Most of the banks still have it. There are exceptions like Westpac. They do not have this cap. So if you have a border that's actually paying you $300 per week, they will use $300 per week. But whereas if you go to ANZ, it doesn't matter how much they pay you, the border pays you every week. The maximum the bank will use is still $150 per week. Right. Then let's move on to the last type of income that we normally see that, which is overseas incomes. This is very hard to. There are policies, but it's very different from lender to lender. But if it can be accepted, if the lender is willing to accept overseas incomes, most of the time they will only consider PAYE incomes, so the salary incomes. Some lenders may consider rental incomes as well, but not very many. Self-employed income is very hard to use for if you receive them from overseas. And of course, overseas incomes will also have to be discounted before you use it. And lastly, some of the lenders they have policies to trade overseas incomes from different countries differently according to the policy. So, for example, if you have overseas incomes from Australia, you get a slightly less discount compared if you receive the income from other countries. So, lastly, let's just very quickly talk about a few very frequently asked questions we got here at Prosperity Finance. So lots of clients ask us if they receive like Uber income, Airbnb income, or if they have a trading business on TradeMe or some similar sort of platform, online trading business. Can they use their income at all? So definitely it's yes, you can use these incomes, but they all going to be treated as a self-employed income. So which means if you're going to bank and you want to use these incomes, you do need to produce at least 2 years financial reports to prove what kind of income you got for past 2 years. The only exception would be that if you are running an Airbnb, some lender have special policy that allows you to use Airbnb instead of treating it as a self-employed income. We also have quite a bit of clients. They are self-employed, but they are contractors with only one sort of contract. Very frequently, we see this in the IT profession. So if you work for one company, but you are working under a contract, it's contract based. Theoretically, it should be treated as a self-employed income. So you need to provide 2 years financials. But very occasionally, some lender can treat this as a PAYE. If it's very stable and you've been working for this company for a long time and the contract has been renewed multiple times, so maybe treated as PAYE. But otherwise, it has to be treated as a self-employed income. Then, if you receive financial support from family regularly, this income cannot be used. Bank or other lenders won't consider this kind of income. And lastly, cash incomes. If you receive cash for the work you do, as different can be used. If the tax, you can show us tax evidence that you've paid tax for all the cash that you received. Yeah, so these are pretty much the most frequent questions we got for the income side of things when people come to us for a home loan application. And hopefully the information is quite useful for you. And thank you very much. See you next time.